Thanks very much for inviting me, Dave, and very happy doing these meetings for people. I could easily do what a lot of people in this business do, which is to show you a few things and then make you pay me for more. Today we're going to do something different. I'm not going to teach you any indicators, any systems, any methods. We're going to focus on the real issue involved in trading, and that is psychology and discipline. Now, I have said many times that discipline is important, but the real issue is understanding what discipline is, and I have a different take on all of this. First, a little bit about me. I've been trading since 1967. I've written about 45 books on trading by major publishers. I'm a real trader. I'm not theoretical, but actual. My work is purely technical. I do not look at fundamentals in any way, shape, or form unless there's an opportunity for a fundamental that gives me a chance to take some money off the table, long or short, if that move is consistent with my position. Everything I do is computer tested. All the strategies are developed completely objectively and are rule-based. I've taught thousands of traders throughout the world how to trade. I've appeared on over 800 seminars, webinars, and conferences. I've been on Wall Street Week, CNN, FNN, CNBC, etc. Here's the good news. I'm not a broker or a trading advisor. I'm just an educator and a trader. As I said before, everything I do is totally objective and rule-based. There'll be no analysis. Let's go on to the next slide. And by the way, I'm not going to give you a hard sell on anything. I'm just going to show you some information. If you can tell me 6 weeks from now, 6 months from now, that I've made a difference in your trading based on these ideas, which are not conventional ideas, that will do it for me. So let me minimize one screen here. Just one moment, please. Let me move this out of the way. Okay, here is an email that I received from a trader not too long ago, and it's very typical of the emails that I get. I'm going to read it to you, even though I don't like being read to. I'm going to read it to you because it's important. I want to stop from time to time and comment. So, hello, Jake. I'm hoping you can help me with my trading discipline. So immediately we can see this individual has identified his problem or her problem as a problem of discipline. I've been an unprofitable trader for 11 years now. I've attended 16 live trading seminars, hundreds of webinars, and had personal one-on-one training. So apparently this individual has been through the routine that many people go to. I have over 63 trading books in my library. I bought 6 different trading systems. I've traded stocks, futures, forex, spreads, options, and even Bitcoin. Nothing is working for me, and that's very typical of many traders. I spend at least 3 hours a day studying my charts. Lately, I've tried everything. I've tried day trading. After reading your books on day trading, that's not working for me either. Everyone tells me my problem is discipline. In your books about trading psychology, you emphasize the importance of discipline, and I agree with that, but how do I get it? I just finished reading a book by Mark Douglas called The Disciplined Trader. Do you think that could help me? Maybe I need a psychologist or life coach. Please help. So again, I don't know how many of you identify with this, but my experience with traders throughout the world for the last 52 years has been, this is very typical. So let's explore this in a little bit of detail. The individual talked about Mark Douglas, who wrote a book called The Disciplined Trader. Mark Douglas was my first mentoring student many years ago, and he then went on to write a book. The reason this individual contacted me is because I've written quite a few books, and apparently he read one of my books. I wrote these books for John Wiley & Sons, The Investor's Quotient, the second edition of The Investor's Quotient, Beyond the Investor's Quotient, and I did a book called Market Masters, in which I interviewed some very famous and successful traders in order to understand what it is they were doing that made them successful, much more so than most people. But let's go back and ask a question. Everybody talks about discipline, but very few people know what it really is. What creates discipline? Can you get discipline from a book, a newsletter, CNBC, or a relative? You can't do that, because chances are they don't know what discipline is either. Can you get discipline from a psychiatrist or a mentor? No. Nobody can give you discipline. If you go to a psychiatrist and you say, how come I can't trade properly? If it's a true analytical psychiatrist in the Freudian tradition, they will say, you had improper potty training. You had bad parenting. You had inconsistent childhood. That's not going to help you get discipline. It might help you understand yourself, but it's not going to help you get discipline. If you have a mentor, what's the mentor going to do? He's going to say, keep on track, follow the rules. But the real question is this, do the rules work? We'll get to that. Can you get discipline from a seminar or webinar? You can't do that. It's not going to work for you. Can you get discipline from religion? Not a chance. Can you get it from an astrologer? There's no way. Can anyone or anything give you discipline? Not a chance. Where does it come from? We're going to explore that because, contrary to what most people think, discipline will not make you successful. Think about that and we're going to get back to it. So, please. I want you to consider the plight. Audio hardware detected. One moment, please. Dave, can everyone hear me?
I can still hear you. It sounds like you backed away from the microphone a little bit, but.
Okay, sorry about that, guys, girls. So consider the average person. They watch a TV ad and they say, you need to trade. Don't get even, trade. So they go to the internet, which of course contains the answer to everything. And if it's on the internet, it's got to be true. And they search on the very top, learn how to day trade. When they do that, they get the following list. And this means 2 billion results. That's 2 billion results. And then, of course, there's going to be all kinds of videos that purportedly teach you how to day trade, how to regular trade, how to invest. And most of these will come to you at a cost. They'll teach you just enough to get you into trouble. And then they'll say, now what you really need is you need to buy this from us. It's only going to cost you $1,400. And if you do it within 2 days, you get a discount. So the person is confused. They say, I will go to the library. I will go to the internet. I'll find a YouTube video and I'll start trading. They get $10,000 together. They open an account. They start trading. The first time they trade, they lose money. What's their reaction? They say, well, it's not a perfect game. I didn't expect to be a winner the first time, so I can accept losing the first time. I'm going to take my strategy and try it again because they've got rules and they know that in order to make money, you've got to have rules. So they apply the rules and they take to the next trade and they lose money again. They're disappointed, but they're very consistent. They say, I've got discipline. I read somewhere that I need to have discipline. I'm a disciplined trader. I read the book. I'm going to do this again. They look at their charts and the chart says, overbought. It's time to go short. They go short. They lose money again. Very typical, normal experience. But to them, it's personal. They say, wait a minute. This is not as easy as I thought it should be. I can accept losing money once. I can accept losing money twice, but 3 times, there's no way I'm going to do that. They go back and they say, now let me look at my last 2 trades. What if I had done things a little bit differently? They say, aha, if I did this a little bit differently, I would have made money the first time, and I would have made money the second time, and I would have made money the third time. All of a sudden, they've got a new trading system. They trade a 4th time. They lose money. They say, that's it. I'm done with this game. I'm going to find something else. And that, my friends, is a very typical response that most people have. The fact is that even the best trading strategies will lose 6 times in a row. If you're not prepared psychologically or financially to lose at least 6 times in a row, you're never going to get started at the game because you'll never give it an opportunity to develop. That is not an issue of discipline. It's an issue of ignorance. You need to know what you're doing. So you've probably seen a lot of trading strategies in your lifetime as a trader, and you say to yourself, yes, the person who showed me this showed me some charts that really look good. They showed me some trades that really look good, but what is the real essence of the strategy? What are the numbers behind it? Let's talk about something else for just a minute. So, why should you listen to me? I'll tell you why. I know what the hell I'm doing. I've been doing it for a long time. I'm not going to beat you up with aggressive sales tactics and offer you great bargains. If you like my work, you're going to come and see it. If you don't like my work, no problem. Maybe it's not for you, but I guarantee you, I will give you the truth. And let's look at some of that truth. Here is part of the problem. This is a comment from a newspaper, from a TV reporter on the Business Channel. And I want to show you something very important. I've highlighted in red words that are meaningless. And let's go through them. And again, I don't like to read to people, but I want to stress a couple of things on this quote. Business TV reporter gets asked, so where do you think the stock market goes from here? The analyst, whatever you call them, says, even though prices are making a standard bear market recovery. Is there a definition for standard bear market recovery? Some people say it's this, some people say it's that. Some people say 10%, some people say 15%, some people say it's indeterminate. It looks like the market wants to go higher from here, expecting the Fed. Excuse me, what the hell does looks like mean? What looks like something to you may look like something entirely different to me. The market wants to go higher from here. How does the market know what it wants to do? Is the market a living, breathing entity? And the reason I'm pointing this out to you is this is the kind of crap that we're subjected to every day on business TV and in newsletters. I'm not interested in these terms that are not defined, but I want to show you how commonplace they are. Then the analyst goes on and says, expecting the Fed to keep rates stable because they are thinking. How do we know what the Fed is thinking? That inflation is under control. What is the definition of under control inflation? And further regulatory controls are not important at this time. Consequently, the Fed will probably not be a factor in the underlying fundamentals. So just in this brief series of about 10 sentences, they've thrown a whole lot of words on you that you probably don't fully understand, or which if you do understand, you understand them in your own particular way, which may be very different than the way other people understand these terms. So let's go forward. In the underlying fundamentals, in the foreseeable future, what is the foreseeable future? 2 days, 2 hours, 2 months, 2 years? Strongly suggesting that prices could go higher over the short term within the context of an intermediate term downtrend. So now we're bringing in the big picture, the small picture, the foreseeable trend, and the context of the intermediate term trend. What is the definition of intermediate term? Resulting from uncertainty regarding the Chinese tariff situation and the outcome of the Mueller investigation. And then the clincher. Of course, geopolitical events could change this forecast dramatically at any time. So what, the hell are they saying? They're saying it could be this, it could be that, but then again, it could be something else. And then the whole damn thing could change. This is your enemy. This is the antithesis of what you want to do. But it happens every day. So let me ask you a question. And the more honest you are with yourself, the more money you're going to make in the long run, and the more you'll learn from me. And I do have a lot to teach you. So let's look at this list. These are the things that I want to know every time I make a trade. And I want you to think about this. I have seen hundreds and thousands of people trade. I've lectured in sum total to hundreds and thousands of people. And I find that traders all over the world tend to make the same mistakes. They tend to do things in trading that they would never do in real life. If you think about driving a car, you would never get into a car unless you knew the car was sound and safe. People get into trading systems, they make trades that they hear about on TV with no track record. They don't know how much they're going to lose, they just want to do it. That's not the way to make money in this market and keep it. So let's talk about my list. And I respectfully submit to you this. If you know even half of everything on this list, you will be way ahead of 90% of everybody else. But if you don't know any of the things on this list, there's a problem. And if you don't have a problem now, you will have a problem later. And let me specify what I mean. Number one, you want to know which stock or commodity or Forex or cryptocurrency or option to trade. That's a good way to start. You want to know what to trade. Most people know that. Number two, you want to know whether to buy or sell. Of course, that's normal and reasonable. The exact time to buy or sell short within 1 minute or less. Most people have no idea about timing. They know they want to get in. They see somebody on TV that says, we bought these calls, we're going to keep them for 3 weeks or more, and there's buying activity, so let's buy it now. I want to know exactly when, to the very minute. I want to know the exact price. I want to know the exact exit. I want to know the exact entry. I need to know that. It's very important. Why? Because my average profit and my average loss will be determined based on the price that I get in. I want to know my odds of success. How often has this program worked? How often has my software given me a signal that has been profitable? Not just in the last 2 or 3 weeks or 2 or 3 months, but in the last 15, 20, 30, 40, 50 years. That's what I want to know. And guess what? That information is knowable if the strategy that you're using is rule-based. If it's not rule-based, it's not knowable. If it's not knowable, someone can tell you anything and you may believe it, and if they back it up with pretty charts, you will believe it. You want to know your risk or stop loss, as well as your first target. You want to know the profit-loss ratio. In other words, are you making more money when you're making money than you're losing when you're losing money? I want nothing less than 4 to 1. I want to make 4 times as much on average when I'm right than I lose when I'm wrong. I want to know the complete track record of my strategy as far back as I can get it. I want to know my average profit, my average loss in points and dollars and percent, my largest profit, my largest loss. And why do I want to know that? If my largest loss in this strategy is considerably more than I'm accustomed to or willing to tolerate, then that strategy is not for you. If you've only got $10,000 in your account and you go through the history of your trades, of the trades on this strategy, and you see that the largest loss was $8,000, that could have some serious implications in terms of wiping out your account. That strategy is not for you. So you need to know these things before you make a trade. If you can't know them, or you can't be told what they are, if they're not knowable, then the system or the strategy is not doable. You will get into trouble sooner or later. You want to know your maximum drawdown, number 11. How bad did things get bad when they got bad? How bad did they get? Is it something you can handle? Can you handle $6,000 against you in a row? Can you handle 6 losses in a row, 7 losses in a row? If you can't handle it, the strategy is not for you. That is not to say that the future will be the same as the past in terms of a back test, but at least it's some sort of confidence and reassurance and insurance policy that you have something that you're looking at which has been historically correct. Number 12, how good do things get when they got good? The maximum upswing. Are you like most traders? You can't tolerate winning. You make $500 and you say, I better take this $500 now before it disappears. You want to know what the maximum has been. Can you handle the maximum? Most people can't. Let's go on to the next list. The number of consecutive losses, the number of consecutive profits. I like strategies that have a large number of consecutive profits. Why? Because those strategies can be maximized and you can build larger positions on those with money management programs. I want to know the accuracy in percent. I want to know how to minimize my potential loss, by which I mean my first target. Once I hit my first target, I want to take my risk off the table and let the trade run because the big money is made in the big move. I want to know my profit potential. I want to know when to move my risk effectively to zero, etc. So this list, including items 1 through 6, which I won't read to you, are very important. I respectfully submit to you that if you know even half of the things on this list, discipline will not be an issue. Your discipline will be inspired by confidence, and let's talk about that for a minute. I'm going to skip this slide. Here's another problem. There's a whole lot of great software out there that makes very pretty charts with all kinds of indicators. The average person buys a program like TradeStation and they say, wow, look at all these indicators. They must be good because if they weren't good, they wouldn't be here. Let's play with them. They look at them and they make this pretty chart and they send it to me and they say, look at this chart, Jake. I say, what the hell is it? It doesn't mean anything to me. I can't figure it out. So I say to you respectfully, this is not what you want to do. First of all, remember this. The vast majority of indicators are based on price. So if you're doing a moving average or an RSI or a stochastic or an ADX or whatever, most of them will reflect price. They will trend in the same direction. So when you look at 6 indicators and you say, wow, they all agree, this is a surefire, absolutely guaranteed positive, profitable trade, think about it, because most of them are doing the same thing, but with different time frames. So this is not what you want to do. You want to move to simplicity, not complexity. Let's talk about that just a little bit. Let's go back to the next one. Okay, so I'm going to repeat this again. Go through the list and ask the question, where does discipline come from? And here's what I want to say to you. Discipline comes from confidence. Where does confidence come from? Let's talk about that. Confidence comes from knowing your trading strategy. Your trading strategy has to be very specific and clear. Now, I'm speaking to you today from Santa Cruz, California, which is not too far from Silicon Valley. Many times I'm invited to speak at investor conferences to tech and engineers in Silicon Valley. Some of the biggest names have invited me to be a speaker at their conferences to teach their engineers and software developers how to trade so that they can have something they can do with investing their money, the big money that they're making in the program, in their companies. So I stand in front of the room and I show them all these different indicators. Many of them are like you people here. You've seen a lot of stuff. You've been exposed to a lot of stuff. You're still trying to search to make things better, to go from losing money to making money, to reduce your workload and to keep it simple and straight and direct. And I say to them, so look, every strategy has to be rule-based, and here's a strategy, and guess what we can do? We can put it on the computer and back test it. We have all the historical data. You don't have to take my word for it. Simply ask the question, does it work? And we can do that using an incredible concept called a computer. One of the tech guys puts up his hand and he says, wow, what a fantastic idea. We'll put this on a computer and back test it. I say to myself, what's that all about? So the question is this, and I give you my honest opinion and my honest advice. I don't care if it's candlesticks, Fibonacci, Elliott wave, the death cross, the golden cross, flags, pennants, rainbow charts. I don't care what it is. Seasonals, cycles, doesn't matter. You need to be able to determine, number one, the exact rules of entry and exit. Don't look at a chart and say, we want to get in about here and get out about here. Don't look at a chart and say, well, it's trending higher, but look, there's a trend line and it doesn't quite fit the trend line, so let's make the trend line a little fatter so the price fits on top of the trend line really cozy. You want to be able to know all the answers to the questions that I just posed on my list of about 16 different items. If you don't know them, I give you my heartfelt advice. Don't trade. If it's not knowable, it's not doable. That's my motto. So let's talk about that. Where does confidence come from? Confidence comes from having strategies that, at least in historical backtest, have worked. If they've worked in backtest, you have confidence and you go into it and say, I know what I'm doing. The computer's telling me what to do. It's based on rules and the rules are clear. Now I know what to do. In addition to that, you're going to know a lot of other things. Number one, how bad has it gotten when it's gotten bad? Because you know as well as I do, no system is perfect. There are no perfect trades. There are no perfect setups. They are all a question of probability. The question that you should be asking for every trade is this: can I afford the loss? I just got back from the money show in Chicago about 10 days ago. And it's always the same stuff at those money shows. Hundreds of people running around looking for answers, going to different workshops and getting confused as hell. And when they leave, they're more confused than when they got there. The guy comes up to me and he says, "Hey, Jay, can you help me? I'm really worried about my position in gold." I said, "Well, what's your position?" "Well, I'm short gold and it's against me by $6,000 and I'm losing a lot of sleep." So let me ask you a question. When you got into this gold trade, what did you expect would be the worst case scenario? "Well, I didn't know." Well, then there's no excuse. Take your loss before the loss is taken, by which I mean the trade, no matter how good the statistics are, has to be acceptable to you in terms of the risk that you're taking. So when I put on a trade, I'm thinking, okay, it's going to cost me $30,000 if I'm wrong. Am I okay with that $30,000 loss? If I am, I make the trade and I say, okay, now I'm going to deduct this $30,000 from my account, assuming the worst case scenario. So it's not even going to be there anymore. I'm not even going to consider that equity as part of what I have, because now I've taken the loss psychologically and I'm ready for what happens no matter what it is. So again, I say to you, if you have a strategy that's rule-based, you will always know ahead of time what your maximum risk should be, approximately. If that risk is no good, is not acceptable for you, then that trade is not for you no matter what, no matter how good the system looks. I'm doing a seasonal webinar tomorrow where we've got some trades that have been right 70, 80% of the time, sometimes 90% of the time. It doesn't matter how right they've been. What matters is how much you need to risk to get into those trades. And the reason that is very simple. When you have an open loss that's too big for your psyche, for your emotions, you're going to want to do things that you ordinarily wouldn't do. You're going to want to get out of those trades because you're scared. If you have an emotional attachment to a trade, you're involved emotionally because of that trade or that potential loss or that potential profit, and you will make a mistake. You need to be clinically dispassionate. You need to be detached. So confidence comes from success. Where does success come from? How can you succeed with a trading strategy that doesn't work? And I want you to listen carefully to this next point. Guy goes to a psychiatrist and he says, "My trading is really bad. What can I do?" The psychiatrist says, "You need discipline." Trader goes home and he says, "I need discipline. That's brilliant. I'm going to be disciplined about my trades." They keep trading and they keep losing money. Here's the issue. If you're trading a lousy trading system that's been right 30, 40% of the time, has lost money a lot, it's lost more money than it's made, and you have discipline, you need to see a psychiatrist, because you have to go on the couch, because it's going to cost you so much emotional losses, because you have been trading with a strategy that doesn't work. So discipline comes from confidence. Confidence comes from a strategy that works, or a strategy that has worked in the past. How do you know if it's worked in the past? For God's sake, we've got computers. Let's do them. Let's use them. Let's put them on the computer. Don't accept the common verbiage. Looks like we want to get in here, or this is a short signal. Ask the question, how often has it worked? When it's gotten bad, how bad has it gotten? Go back to the list that I gave you. That's the best thing that I can do for you today. So the question is, how can you succeed with a trading strategy that doesn't work? You can't unless you've got unlimited money. So you say, well, hedge funds do it. How do hedge funds do it? Well, I know the answer to that because most of the major hedge funds are clients of mine. They buy research from me. How do they do it? That's easy. They're trading with OPM, other people's money. The money that they're losing on a position in the market, it's coming out of their account. It's coming into the back door from new people coming into their fund. So they're always getting money in the back door and putting money out the front door in losses. So they're covered. They don't need to make those emotional decisions because they know if they've got a good track record, all they need to do is go to people with money who can use the tax write-off if they're wrong and get more money and keep trading. Most people can't do that because you're not a hedge fund trader. What do you know about your trading strategy? You need to know the numbers. I'm a numbers guy. Being a numbers guy has been my key to success. Let's look at the next one. What are the results historically? Again, I'm dealing with the information that's knowable and determinable using computers. Success creates confidence. So let's go back to the beginning. It's not about discipline. People say to me, hey, Jake, you wrote those books on trader psychology. Which one should I get? I say, don't get any of them. Don't buy my trading books. Don't buy my books on trader psychology. Things are not what I thought they were when I first started trading. I thought psychology and discipline were great, but it's not true. They are second. Putting discipline first is putting the cart before the horse. Before you do anything, you need to have something that works. So let's go. Consecutive losses and drawdown and all the rest of that stuff. So here's the thing. If you have a strategy that's been back tested and the rules are clear and you apply the rules and you know the worst case and best case scenario, you will have confidence. If you have confidence, it's going to facilitate discipline. If you have discipline, you're going to make money. If you make money, that's going to create more confidence. If you have more confidence, you're going to have more discipline. If you have more discipline, you're going to make more money, and that's the way it goes. So how do you get a strategy that works? It's a piece of cake. You've got software all over the place. So if someone says to you, trade the double whammy reversal, it works really well. You say, what is a double whammy reversal, hypothetically? They say, well, it looks like this. You want to say, I don't want looks like, I want rules. What are the rules for the double whammy reversal? You take those rules, you put them on the computer, you ask the question, how often has it worked? Is there a stop? What's the stop? What's the profit target? All of those things are knowable. So let's go to the next slide. I use a strategy called setup, trigger, follow through. Every trade has to have a setup. The setup has to trigger, and there has to be follow through. The setup is a pattern. Once you know the pattern, you backtest the pattern, you put the rules on the pattern, you say, I'm going to take the pattern if it triggers, which is what most people call timing, and number 3 is a follow through. Very important point over here. Setup is a 100% rule-based condition. Trigger is a price action based, and follow through. Remember this, 80% of your money is going to be made on 20% of your trades. That's true of a good trader. So you need to know how to let the profits run. If you don't know how to let the profits run, you're going to be screwed, like most traders. I like to use what I call the 7 F words of trading. Number 1, find the trade. You do that through a strategy and rules. You don't do it by looking at a chart and saying, looks like this. Fact check. Did you get the details correct? You'd be surprised how many traders lose money because they didn't get the facts correct. Formulate your plan. In other words, when to get in, when to get out exactly. Follow through, finalize by putting the order in, fix all your mistakes or failures, and then formulate your next action. Very, very simple. The 7 F words of trading. And let me talk to you about this. If you want more information about me, I'm at jake@trade-futures.com is my email. I have a number of websites. I'm doing a webinar tomorrow on seasonal concepts in trading, which is a very accurate way to trade, where we show the complete track record, all the rules and everything. And if you're interested, you can get in at the client price. It's not $2,000, it's $149. But again, you don't need me if you can do everything that I taught you here today consistently and clearly. You don't need me. But whatever you do, I encourage you, whether you do business with me or not, I encourage you to follow the rules and look at that list that I gave you. Once you know all those things on that list, you'll be way ahead of the game, much better off than most people.